company called Tata Consumer Product. Previously, it was known as Tata Global Beverages. Basically, this company is a Group A company in Bombay Stock Exchange. It is listed in top 100 companies of BSE. It was basically a tea and coffee company, but recently the company portfolio has been changing. They are spearing into a strong FMCG company. They are aggressively investing into other product segments in order to be a leader in the FMCG company segments. Company comes under the Tata group of companies. They have many brands and products, say like Tata Tea, Tata Tetley, Tata Salt, 8 O'Clock, Sampann, Kefi, Australia, in Australia, Himalayan waters. They are dealing into ready to eat, salt, pulses, spices, ready to eat, ready to drink, etc. They also have joint venture with Starbucks. In India, they operate in nearly 10 cities, and they also have a joint venture with PepsiCo under the name NourishCo. You might have come across the brand or say water packing or Tata Water Plus or Tata Gluco Plus. They all fall into the joint venture of PepsiCo and Tata. Tata Consumer Product. It is the second largest brand in world, serving 300 million families. Its market capitalization is 34,000 crore. Basically, market capitalization is calculated by current share price multiplied by total number of outstanding shares. Its income has increased by 65% in March 2020 compared to 2019. Net profit increased by 27.4%, which is a very good sign. Total asset has increased by 140.79% approximately. I mean, this shows that company is heavily investing into various acquisition, various assets to boost its revenue. Its book value has increased by 67.2%, which is again a very good sign. Basically, a book value is calculated as company's total asset minus company's total liabilities. It is basically the value a shareholder gets if God forbid a company goes belly up or liquidates. That's the value basically a shareholder can get from the company in worst to worst situation. The company has a history of declaring regular dividend and bonus on say regular basis, say 5, 6 or 10 years of tenure. There are some weaknesses or like say some shortcomings or something they need to work on, or like they don't have much product compared to other industry players into the market. They need to boost their product line with new and innovative, and plus they have to be very concerned about the price of the product, as the Indian market is very price sensitive kind of market. It has a high PE value. Its PE value is near about I guess 89% if I'm not wrong, which is very high compared to industry standards. Basically, PE high is whenever the PE ratio is high, it means that the company is either overvalued or their companies or the investors are thinking that company will have a strong growth in future. PE ratio is basically nothing but share price divided by EPS. EPS is nothing but earning per shares. Company has also taken, I guess, lots of borrowing. I guess recently in last couple of years, its financial cost has increased by 95%, which is a sign of bit concern. Interest coverage ratio has declined by 0.72% in 2019, which is a very slight change in their ability to pay the what we say loan or the borrowing whatever they have accumulated or taken. Return on asset has declined by 1.25%. Basically, they have invested heavily, and due to global downturn or slowdown, there might be difficulty in generating revenue from whatever investment they have made. Return on asset is basically nothing but the management ability to generate earning from the asset or whatever investment they have made. It is one of the best criteria you can go for to 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 look into company whether you should invest in company or you should not, because it takes companies total borrowing, unlike other, so what do you say, key terms or financial terms. So it is a very good term, return on asset. I mean, you can basically easily find out what is the current, how does the management is, how efficient the management is working. There is a decline in, say, banks and other financial organization investment in the company, which might be because of the slow growth due to the financial situation that is going on currently due to COVID, or it might be like there are some looking for some better, faster returns. Okay, the company promoters have basically, there's a slight increase in the promoter side shareholding. So basically, that is a very good sign. That means the company promoters have confidence in the company that it will have a good growth or good show in coming future. The pledging of the shares has also been declined, which is again a very good sign. Pledging is nothing but the company, I mean the promoters, they keep their shares for mortgage or borrowing, for n number of reasons that can be. And there is a slight decrease, not slight, there is a major decrease in, say, foreign institute investments, which might be due to the global downturn or the recent change in Indian government regarding the foreign investment that should be, what we say, foreign investment that should be done, or that should a company should hold. There is again, we can see over here the financial institutes and other banks have declined their shareholding in the company, but at the same time the insurance companies have increased their investment very tremendously. This shows that they have like a long-term growth. I mean, there's a picture that, I mean, we can expect a very good long-term growth in the company. Same goes for mutual fund. Mutual fund have also increased their part of investment in the company. I think the company should go into more health and nourishment product. They should have more, say, good, decent products based very price sensitive to the both urban and rural market of India, as well as around the world. They should increase their financial. I mean, they should invite more of the banks and financial institute for their shareholding. This will help them to lower the burden, or like this will gain confidence, and they will be able to move smoothly if the investment or from the banks have increased. This is basically a 10-year, say what we say, graph of the company. In 2010, company splits its share face value to 10:1. You can see they have an average high of rupees 247.4 approximately in past 10 years, and a low of 144.7 approximately. Okay, here comes my personal view. Basically, the shares at the current market price, it's going around, say, 360 or 370 approximate. I guess it's trading around 360, 370, which I guess is quite high. And for short term, you can get into the investment to get 10 to 12% to 14% around. at this current level, but still I would stay away from this share right now. I will be waiting for uh, the price to go down by say near about 50 rupees per share. That is coming around near say 300 or 330 level. That will be better to get into the company and then wait for if there will be further decline due to COVID or due to the economic slowdown. The company might, the share price might come to 26 to 80 to 70, which will be the very ideal state to invest in for the long term. I don't prefer to go for short term investment, so I will be waiting. My personal view is to wait for the right price to come. The right price will be around say 300 level. Then again it goes up to the individual capacity of taking the loss or profit. That's again an individual call. This is basically a team which the company has, and it's a very strong team, so we can rely on them. They are doing their job very good. And one more thing I would like to add, I missed in the entire presentation, the beta value of company is 0.96, which is very close to 1%. So it adds a little risk factor at the current state of level. But I guess in long term, the picture might be much better.